Hello, and welcome to this overview of Aristotle Atlantic Partners. My name is Walt Holman. I'm a senior research analyst on the AAP team. Today, I'd like to introduce you to our firm by providing overviews of our background and history, investment philosophy, investment process, and I'll also provide a little bit of detail about our various investment strategies. First, let's take a step back and see where AAP fits in the overall Aristotle family. We joined the organization as an affiliate in late 2016, and like other affiliates, we operate independently but leverage the same shared services platform. As you can see, our classification as a U.S. equities manager is similar to that of Aristotle Capital Management and Aristotle Boston. However, what differentiates us is our focus on large cap growth and core strategies. Here we have a timeline of our team's activities, both at our prior firm and Aristotle. On the left side of the timeline, Owen Fitzpatrick, our lead portfolio manager, started building the team at Deutsche Bank in 2004, with other current investment team members joining in 2006 or shortly thereafter. In 2016, after 10 years working together at Deutsche Bank, we collectively decided to make the move to Aristotle for three key reasons. Number one, we believe that moving to an independent firm with an affiliate/shared services platform would provide a better opportunity for us to grow AUM. Secondly, moving to Aristotle offered the opportunity for us to gain meaningful equity ownership in the new firm, something that would never have been possible at Deutsche Bank. Equity ownership makes all of us business owners and further aligns our interest with those of our clients. And finally, at Deutsche Bank, for a variety of reasons, each team member had other responsibilities beyond researching stocks and managing portfolios. Aristotle's affiliate business model, supported by a shared services platform, has enabled us to devote more time to what we do best, picking stocks and managing portfolios. We are a team of five, and as I mentioned, we're led by Owen Fitzpatrick. Not shown here is our newest and sixth team member, Rob Weeks, who is our portfolio specialist. And as you can see from the team tenure column, we've been together a long time. In the 17 years we've been working together, the structure has remained the same, and Owen has been responsible for all activities regarding the team as well as investment-related decisions. 4 team members have specific sector coverage, as you can see on this slide. In addition to my sector coverage in financials, utilities, and communication services, I am also the AAP point person for everything related to sustainability and ESG integration. Now, although the team structure on this slide appears siloed in terms of sector coverage, there is quite a bit of collaboration among all team members, which I'll talk about a little bit later. Moving on to an overview of our investment philosophy, we feel that our philosophy is a key differentiator of our firm. Through rigorous bottom-up research, we seek to identify large cap companies that we believe are poised to benefit from secular themes, product cycles, and cyclical trends. And while other firms may include some of these elements in their investment processes, it's the combination of all three and our unique approach to secular themes in particular that differentiates the AAP investment philosophy from peers. On this slide, you can see the approximate weight that each of these categories represents in our strategies. Now, these are only meant to give you a sense of this representation, as these ranges are not strict investment guidelines and can vary over time. So now let's dig into the first category, secular themes, in a little more detail. We currently have 20 secular themes represented by individual stock holdings across our strategies. We don't have a set number of themes that we look to identify, so it just happens to be 20 currently. Historically, the number of themes has been within a few plus or minus of 20. The themes you see with a green leaf next to them have been designated by us as having attractive ESG characteristics. I'd like to point out that thematic investing is not new. It's been a big part of our investment philosophy here at AAP for a long time, but we didn't invent it. However, I think an important takeaway from this presentation is how our approach to secular themes differentiates us from competitors. I previously mentioned that it's the unique combination of three categories: secular themes, product cycles, and cyclical trends, that differentiates us, but it's also our unique approach within each of these buckets. So first, how does AAP uniquely define secular themes? Secular in this context means long-term. When we evaluate a theme, we are looking at least 3 to 5 years, but the reality is that the majority of these themes are likely to be relevant for much longer. As an example, personalized health is a theme that we expect to be relevant for multiple decades. Secondly, and probably most important, is the key characteristic we look for when evaluating a theme, and that is long-term shifts in spending. Now, this can be shifts in government spending, consumer spending, or corporate spending. Each of these types of spending can be quite large and span over many years, and therefore can have important implications for companies positioned to benefit from that spending. A few examples might be in the infrastructure upgrade theme. We expect this to be driven by new government legislation that will fund nationwide infrastructure spending for many years to come. In the security theme, we expect increased spending by corporations over time to improve their defenses against cyber attacks, as one example. And then in digital connectivity, this in part relates to explosive growth in consumer spending on all things digital, including social media, streaming, and mobile apps. Importantly, the secular themes here are not aspirational nor futuristic. In order for us to include a secular theme on the list, there must be what we call money in motion. In other words, we have to see evidence that the spending is already occurring. Oftentimes, you'll see thematic investing employed by other firms in a top-down fashion, where themes are identified first, and then the stocks are selected. While our process has some of this top-down nature to it, another key differentiator for us is how we source our ideas, and that is very much a bottom-up process. We own over 75 unique names across our strategies and have another 60 to 70 names on our prospect list. Our analysts closely cover all of these names, and it's during that research process that many theme ideas originate. Now, this is because it's at the company level where we typically hear about shifts in spending first. Now, alternatively, we may hear about a theme in a more general sense and then monitor our companies for evidence that money is in fact in motion. I'd like to point out, though, that historically we have been a little bit early in identification of some of our themes, but we've always waited for indications that a spending shift is occurring before investing. And I think 5G is a good example of that. We were about 2 years too early when we first started talking about it within our team. But eventually the big US wireless carriers started forecasting capital expenditure plans that included spending on 5G upgrades. That was our indication that the time was right to invest. I think 5G is also a good example of a secular theme that largely ran its course and was ultimately removed from our list. So that's why you don't see it listed on this current deck. And just a few additional notes on AAP secular themes. First, not all themes are created equal. Each has its own level of attractiveness and long-term total addressable market potential. In general, the representation of each theme within our strategies in terms of weighting approximates these differences. Secondly, secular themes do have life cycles, as I mentioned with 5G. Some are expected to be relevant for many decades, but others run through their life cycles over a shorter period of time. Finally, as a team, we meet at least quarterly to review our list of themes and discuss ideas for new themes or whether an existing theme should be removed. Each analyst is encouraged to bring ideas and debate to each of our meetings, and it usually makes for healthy and interesting discussions. Overall, the secular themes category typically comprises 60 to 80% of our strategy weighting. So let's move on to the other important categories in our investment philosophy. In product cycles, we are looking for companies that are in the midst of a major product introduction or upgrade. We look for disruptive products with large total addressable markets where a company has a strong chance to gain significant market share or revolutionize a market. Companies in this category typically have strong competitive moats bolstered by intellectual property or first mover advantage. As such, most of these companies tend to be in the healthcare, tech, or consumer discretionary sectors. A few examples of companies that are benefiting from product cycles are Dexcom and Abbott Labs. Both of these companies make continuous glucose monitors, which are revolutionizing the market for monitoring and treatment of diabetes. The technology developed by these companies replaces the need for regular finger sticks in traditional glucose testing. These companies are also beneficiaries of our personalized health secular theme. So there can be overlap between categories, and often there is. But the unique medical technology and patent protection these companies enjoy has strengthened their competitive moat, and therefore they are considered product cycle stories first. Overall, product cycles typically comprise 15 to 25% of our strategy weighting. The smallest category in our investment process is cyclical trends. This category is what you might think of as a more traditional top-down approach to investing, where we attempt to determine where the economy is within the business cycle and select stocks based on that view. In general, this would entail buying cyclical companies during economic expansions and more defensive names during economic slowdowns. Our view in this category tends to be more short-term in duration compared to our secular themes and product cycle categories, typically 12 to 18 months versus 3 to 5 years or longer for the other categories. Therefore, there does tend to be more portfolio turnover within this category, as it's more tactical or short-term in nature. And here you can see a list of the current cyclical trends we have identified and that are represented in our current strategy. Overall, cyclical trends typically comprise 5 to 15% of our strategy weighting. We map each holding in our strategies to a specific category: secular theme, product cycles, or cyclical trends. Each holding is assigned to one of these as a primary mapping. However, as I mentioned in personalized medicine, companies can be mapped to more than one category. So we also include secondary classifications that you see here. And I'll highlight a couple examples. At the top, you can see that Abbott Labs has a primary classification as a product cycle, again, which I talked about just a moment ago. However, it also maps to several secular themes as shown under the secondary classification column. Another example, Antero Resources, further down the page, has a primary classification under the energy security secular theme, but also a secondary classification under cyclical trends, which currently would be the oil and gas project recovery trend that we have identified. But this begs the question, why have more than one classification? I showed the approximate overall portfolio allocation to each of the three categories on slide 5. This gives an approximate allocation at the primary classification level. However, our holdings rarely fit neatly into one category. Although there typically is one category that characterizes the company best, hence primary classification, we also find it helpful to show where secondary classifications exist. Moving on to the investment process and how the AAP investment process is accomplished on a daily basis. The entire process is overseen and led by Owen Fitzpatrick, our lead portfolio manager. As previously shown on the investment team slides, the remaining 4 members of the investment team have specific sector coverage. Each analyst is responsible for idea generation, which includes more than just specific companies, but potential secular themes, product cycles, and cyclical trends. As analysts, we conduct in-depth industry and company research, including ESG, to determine which names are best suited for potential inclusion in our portfolios. Each analyst discusses their sector coverage and ideas directly with Owen, who makes final decisions on which names to include in our portfolios. The slide here might imply that our investment process is linear in nature. However, it's really more cyclical in nature, as the evaluation of potential ideas and existing holdings is a continuous ongoing process for our team. And earlier I mentioned collaboration across team members in the research process. As part of this process, we have regular team meetings to share ideas, debate, discuss economic and market trends. And during earnings season, because of the number of companies that are coming out with new news on a regular basis, we meet more regularly to discuss current events. In terms of portfolio construction, our process involves regular discussions between O and other team members responsible for sector coverage, as I mentioned. Once it is decided to add a new name to the portfolio, a determination is made about the size of the initial position in terms of basis points. Now, this can depend on several factors, including the holding's weight in the underlying benchmark, our level of conviction, overall portfolio considerations, including the total number of current holdings and existing sector and industry weights, and possibly any restrictions involving individual position size limits. Our turnover is low and we do hold stocks for very long periods of time, but we don't own them forever. When we do consider exiting the position, it can be based on deteriorating fundamentals, valuation, changes in our assessment of the management team, ESG considerations, among many other factors. Now, of course, decisions regarding holdings aren't binary, and by that I mean it's not just initiate or sell completely. We do often adjust existing positions by either adding to them or trimming, which can be driven by changes in our level of conviction, portfolio risk considerations, such as limits on sector or position weights, or valuation. Continuous portfolio risk management is a key part of our overall investment process, both at the individual stock and portfolio level, and does include ESG considerations as well. Our entire team regularly assesses holdings at the company and sector level for any changes that might affect our conviction level or overall opinion on a holding. This also includes monitoring of any deviation outside of risk limits, including position size and sector weight guidelines. At the portfolio level, we are monitoring for any deviations from desired benchmark tracking error, style classification, or other risk considerations. Finally, I want to provide a brief overview of our available strategies. At AAP, we manage three main U.S. large cap equity strategies: core, growth, and focus growth. Another important takeaway for you today is that AAP has one overall investment process that derives secular themes, product cycles, and cyclical trends, and ultimately identifies attractive stock ideas. Previously, I mentioned that there are approximately 75 unique holdings across our strategies. Note that a stock can be held across multiple strategies, but overall, there are 75 unique holdings. So how do we determine which stocks should be included in which strategy, or whether it should be in multiple strategies? Think of this as a filtering process in which stock ideas at the very top are filtered into one or more strategies based on the strategy's characteristics. The primary determination is usually based on the underlying benchmark. You can see here that Core's benchmark is the S&P 500, whereas it's the Russell 1000 growth for the growth and focus growth strategies. We can buy off benchmark names within a strategy, but for the most part, holdings are also constituents of the underlying benchmark. Also, as you might imagine, stocks in the growth portfolio tend to have more growth characteristics, for example, higher earnings growth rates, higher PEs, whereas core tends to be comprised of more of a mix of value and growth stocks, just like its S&P 500 benchmark. In terms of number of holdings, core typically has about 45 to 60, so it's well diversified. In the growth strategy, we target about 35 to 50, a smaller range than core. This is largely because the Russell 1000 growth benchmark has no weighting in materials, energy, or utilities. So that results in fewer overall holdings. Focus growth is a concentrated version of our growth strategy. One way to think of it is as our highest conviction names from the growth strategy. And therefore, focus growth has just 25 to 30 holdings. And as I mentioned at the beginning, we are a U.S. large cap equity manager. We define large cap as stocks with a market cap of at least $2 billion at purchase, which is consistent with our underlying benchmark. So this ends my formal presentation of the AAP team and investment process. The remainder of the slides provided here will provide you with more details about our three strategies, as well as a brief overview of our ESG integration process. Thank you for joining me today, and I look forward to meeting each of you.